Wow, that was a tough week. This is a chart of the SPY. You can see the big run up that we had in January. In fact, the SPY hit about 286 before it started to roll over. Bullish sentiment was extremely high, and those bullish speculators started to get flushed out in a very big way. Once that happened, programs started to kick in. I believe that most of the market action these days is taking place by trading programs. And once they started to trigger, one triggered at one firm, and then another one triggered at another firm. And before you know it, we are in a full blown drop. There wasn't any other news to really justify this type of drop. And all of these programs continued to kick in this week. So I believe future corrections are going to be very, very fast and very furious. Yes, there were a few news items that might have prompted some selling in the market, but nothing like this. This is the largest correction that we've seen in a couple of years. The good news is that there was some very constructive price action on Friday. We were looking for a capitulation low, and we found one right here on the 200-day moving average. You can see how the market fell. It found temporary support at the 100-day moving average. The next day, it blew through that, and on Friday, we took out that low, and we also fell down to the 200-day moving average. But once that low was established, man, did we see buying come in. We closed at the high of the day and actually closed in positive territory. This is a capitulation low. We don't see these very often, and it is a fantastic opportunity. Look at the volume. That is the blow off volume that you see with one of these lows. I'm expecting us Monday to gap through this 100-day moving average. It's what I've been telling my members, and believe me, we are positioned for it. Now, truth be told, I did see this drop coming, but I did not expect to see a 10% correction. I was looking for a little bit of a pullback. I thought I had us in some very safe names. Everything got hit. We did add on the way down right in here on Monday, but we saved some firepower for this low right in here, and we bought that low, and now I believe our positions are going to do extremely well for the next few weeks. And typically, once you have these capitulation lows, you will see follow through for probably a couple of weeks or so. These same programs that were responsible for this big drop are also going to fuel the rebound. This market is poised to rally. We are in the economic sweet spot. I know that many of you have heard rumblings about, well, inflation starting to creep into the economy. We're seeing wage inflation in the last unemployment report. We haven't seen that for a while. That was one unemployment report. And higher wages are good for economic growth. They're good for consumer spending. The Fed said that they just hit their 2% inflation target, but that does not mean that they are going to hike aggressively. We have a new Fed chairman at the helm, and he wants to make sure that markets are stable during his transition. Many analysts were calling for 4 rate hikes this year during the last FOMC meeting, which, by the way, they saw the unemployment numbers before it was released. They said that they only plan to raise 3 times this year, so that is relatively dovish. Interest rates are still near historic lows. They are not overheated by any means, and they will not impede economic growth. Economic growth, according to the Atlanta Fed, is going to come in at 5.3%. Folks, we haven't seen growth like that since the late 1990s. Those are incredible numbers. The tax cut is definitely going to prompt corporations to invest in the US. And by the way, corporations have been buying back shares like mad for a very long period of time. Since the year 2000, they've retired 50% of their outstanding shares. When you have the same amount of money chasing fewer shares, they go up. That alone is a huge force that's going to propel this rally. So this capitulation low is a buying opportunity that's going to last for a few weeks. We are in a great position to take advantage of it, and you can still enter our positions at the prices that we were able to get in at. So you will see a gap higher above that 100-day moving average Monday. And what I believe is going to happen is we will run up to this 270 level. We'll probably come back and test that 100-day moving average. And then the next leg of this rally, which won't take long, is going to fuel us perhaps back to the high. We may not get quite up to that high until the FOMC statement in March comes out, but this is an incredible buying opportunity. Excuse me, from a valuation standpoint, stocks are a little bit rich, but we are nowhere near bubble territory. Even at the peak here, the forward PE on the S&P 500 was about 17.5. Down here, the forward PE was at 16. So we're probably at 16.5 forward PE right now. That's a little bit rich, but not when you consider that corporate profits this year are projected to grow 17%. Folks, interest rates are low, inflation is contained, economic growth at 5.3% in Q1, 17% profit growth this year by U.S. corporations. This is the sweet spot. This market is going to rally like mad, and this is a buying opportunity, and option chat and spread chat are positioned for it. So what I've done is for the next 3 days, I have discounted each of my chat rooms. I don't discount them very often. So you can see they're normally $299.95 per quarter. I've reduced them by 25%. In my chat rooms, everything is posted before the open. That means new trades are posted before the open. Extensive market comments are posted before the open each day. If we have positions on, the new targets are posted. The stops are updated. All of the information you need is available before the open. And I've done this because I know that a lot of you that like to trade options are very busy. Some of you are working professionals, and you don't have time to monitor positions during the course of the day. So everything you need is posted before the market opens. The other nice thing about it is that this gives all of us an equal opportunity to enter the trades. It's very, very hard for me to predict what's going to be happening before the open, especially when you have 100-point S&P 500 moves on a daily basis. But I've been able to do it very successfully. Option chat is up 227%. It was started in June of 2017. This is the account. This is not one trade. These are all of the trades, and we use a 25% allocation for that. Spread chat just started in December. We're gaining our footing right now. We will start to gain traction now that the market is capitulated, and this is going to set us up with great opportunities. I'm not embarrassed by my track record. I don't hide my track record on some back page. You can click and see the track record for each of my chat rooms. And in fact, I rely on my members to tell me when they got filled. When they get filled, they post their fills in the chat room, and that's when I know I've got something I can add to the track record. So these are real trades. www.oneoption.com, write out one option, and I hope that you join up. We have a tremendous opportunity. You can still get into our positions, you can get into our trades, and I've discounted the price of the chat room. So you have lots of reasons to sign up this week. I know it was a tough week. It was a nail biter for us too. We had current positions that were moving against us. We were adding as the market was coming in, and it looked like the bottom was going to fall out. Those are exactly the times that you want to take action. And if you're not sure if you want to join or not, mark my words, you're going to see a big rally next week, and you're probably going to see us challenge that high in the next few months. Thank you. I hope to have you aboard.